Hello everyone. Hello everyone, I'm Dr. Swati welcoming you to the global online platform. So today we are continuing our target of 1000 plus MCQ series over here, and this is a part 16, and in the today's lecture we are taking in something different, that is advanced level of accounting. Okay, and here we are advanced level of questions, and also some basic is also involved, because basic things comes without your basic knowledge is perfect, you can't go the advanced level. And here we are taking the entire revision of the entire unit of accounting and auditing. Okay, so let's start without delay. Before we go ahead, I will just quickly tell you about the global online. So here you will get a complete course of commerce and management, and our new batch going to be started from the 1st July, that is from the Monday. And every Monday there will be a new batches for you. Okay, so for your better facility, if you are not aware with our classes, so every Monday you will join our new batches. Okay, and the global online provide you the 50% discount on the fees, and the 5,000 rupees you will get if you register yourself for the paper 2. You will get paper 1 is free of cost. Full paper 1 is free of cost for you if you register for the paper 1 paper 2. Clear. Here you will get a daily live lecture syllabus, full complete syllabus notes in the PDF format. Okay, and the full syllabus mock test, more than 4000 MCQ series, MCQs with a detailed explanation. Okay, and the PYQs with a detailed explanation, and the contact number is given in your screen, so get in touch with this contact number. It will help you. They will help you more. And how to download the global online platform? So go to Google Play Store, just search it, download, install it, and after installation you have to register with your number. Once you register, you will find a section of the my course, and in that section, whatever the course do you want for the paper 2, this is given. So in this 5,000 rupees you will get full course with paper 1. Okay, and how actually look like our app of the front page once you are register. So here you will get all the unit wise material, and the video recorded lectures, and the live notifications, lectures notification of the lectures. So it will everything is available in a very systematic manners, and as per paper 1, as per paper 2, paper 2, as per paper 1 is also all the materials is given in the very systematic manner. Okay, clear? So yes, let's start with our first question, that is, when the value of investment in a subsidiary in the holding company's balance sheet is more than the book value of the net asset acquired, comma, the difference represent. So here is what the question is talking about. Actually the value of investment in subsidiaries. Okay, and this question is from the holding company. Okay, and in the holding company, the value of the investment in subsidiary, it is in the balance sheet is more than the book value. If it is valued at more than the book value in the balance sheet of the net asset acquired, the difference represent. If you see that this the value in the subsidiary company, the balance sheet is valued, okay, is more than the book value. Actually we whatever the amount we are mentioned in the balance sheet, it's actually it's related to it's the amount is it's based on our book value. Okay, but if some case the value is more than the book value, if you find that is in the balance sheet, so what are the difference, you have take the write it in the balance sheet. So there's a difference where you represent this difference. Okay, because if the difference is there, so there will be no actual balance, or the actually the fair balance sheet is showing. Okay, so that's why that's the difference we have to be represent in in which statement? Okay, so here's the option number 1, that is capital reserve on the consolidation. Option number 2, goodwill on consolidation, or the minority interest, or the post acquisition profit. So if the value is the book value is more than the book value, okay, the question is about the more than. If they register the amount is more than the book value, that means the market value of the particular asset is greater than its book value. Okay, greater than its book value. So if their book value, if their value of the asset is a greater in the market value, it's having the greater value in the market, so what is that? That means they having the goodwill in the market. That means the goodwill in the consideration. So that difference, because it is more than the book value, so it is a considered as a goodwill. If it is a less than the book value, so in that case the difference is represent as a capital reserve in the consolidation. Okay, clear? If it is a greater than the book value, is less than the book value, so it is represented the capital reserve. But the question is, in this question is talking about the more than the book value, so it is a more than the goodwill. That means the company having a goodwill. Okay, so the difference we take in the goodwill account. Clear? So the option number 2 is right over here. Okay, the next question, it is a this question is is a matching list. Okay, here the method is given and the purchase consideration is given. So lump sum payment method, net asset method, net payment method, and the swap ratio. So what is it? Okay, so here the what is the meaning of that purchase consideration? Why this method is we have to use? So we just match this concept. Okay, so what is a lump sum payment method? So lump sum payment method is what? It is a amount. It is what? It is the amount to be paid by the transferee, okay, by the transferee company to transferor company for amalgamation of its business. Oh, that is a lump sum method. So lump sum method is the amount to be paid by the transferee company to the transferor company. Okay, so here the transferee company give the lump sum amount to the transferor company for what they are amalgamating the business. So that is the lump sum payment method. Clear? Now the next one, that is a net asset method. So what is a net asset method? Net asset method is arrived at by adding the aggregate value of asset taken over and deducting there from the aggregate value of the liability. What we are doing over here, we are adding what we did do in the net asset. We are have to calculating the net asset. So how do we calculate net asset? From the total asset, we have to deduct our liabilities once from the total asset. Once we deduct our liability, so what will we get? We get a net asset value. So that is a net asset method. So the statement is also about the adding the agreed value of the assets, okay, taken over, and from that value what they doing, they deducting their agreed value of the liability. So that is a net asset method. Now the net payment method. What is a net payment method, ma'am? So net payment method is what? It is a calculated by adding up the total amount of money value, okay, of a existing share, preference share, cash received from the purchasing company for the shareholder of the vendor company. So what we are doing here doing this, what we're doing, we are doing the payment. Okay, so and how do we calculate the payment? From the payment we calculate the payment. Okay, what he is talking about, the payment, we are paying something. Okay, so what we're doing, the adding up the total amount, okay, whatever the actual money value we have, okay, of what? Of our existing shares, of our preference share, of our cash received. So from this total amount we have, from this amount when we giving the payment to the vendors, okay, the purchasing company, okay, to the shareholder of the vendor. So this is a net payment method. Okay, now what is a swap ratio method? Swap ratio method is the method on the basis of ratio. okay, in which the share of the transferee company, are to be exchanged for the share of the transferor company. So what they using? They're using the ratio basis. They're calculating their values on the basis of their ratio. So you can match easily the ratio with your ratio. Okay, clear? So what they're doing, they're swapping their ratio. How they're swapping? What they're doing, the transferor company, the share of the transferor company are to be exchanged. What they're doing, they're exchanged from the shares of the transferor company. Clear it? That means they're swapping their shares from one place to another place, from the transferee company to the transferor company. Okay, so this is a swap ratio. Clear it? Hope you are understanding. So according to this question, you know that the A having the 3. So A having a 3, that is a 2 option. Now the last one, that is a D having the 2. So where it is D having 2, the only see these options. So A having a 3, B having a 4 and C having a 1. So option number 2 is right over here. Clear? Hope so you are understanding. Now the next question, that is X and Y are a partner sharing profit and loss in the ratio of 4 is to 4:3, and they admitted whom? The Z. Okay, into the partnership. Either one, this is not one, this is a, I think this is yes, this is a 1/5 share. Okay, for the 1/5 share, and X and Y decided to share future in the ratio 2:1. Okay, so what is the sacrificing ratio of X and Y? So how much they are sacrificing? So we have to calculate their sacrificing ratio. This is a really important question, because every paper, you took every year paper, every shift paper, they ask the question from the partnership and especially from the calculation area. So this is a basic question. So what we do over here, you know that the Z having their new share, that is a 1/5 share. Clear? And if he put a 1/5 share, what is the balance of share they remain? So the balance of share is 1/5 share, and this 1/5 share distributed between the ratio of which ratio? In their new, okay, of the X and Y decided the share future profit is 2:1. So these ratio they are distributing in the 2:1 ratio. Okay, that is in the 2:1 ratio. So what is clear? In the 2:1 ratio. So how they doing? How from the X is taking 1/5 of share in 2/3. Okay, and Y taking a share 4/5 of share by the 1/3. Okay, so how much we will get? We get 8/15, and here 4/15. Clear it? This is clear. Now what they are doing, they're sacrificing. So we have to calculate, this is their new ratio, and what are their old ratio? Their old ratio having a 4:3. So X having his old share is 4/7, and his new ratio, from we deduct from the old ratio new ratio, we will get a sacrificing ratio. So 8/15, and Y is also doing the same, that is a 3/7 minus 4/15. So when we calculate it, we will get 4 by nearby 4/105 and 17/105. Okay, so they are sacrificed 4/17. Okay, so where it 4/17? Yes, this is the option number 4, 4/17. Clear? 4:17, sorry, 4:17. Clear? Now the next question, that is a liquidator after realizing after realizing the assets of the company should distribute the proceed among below the mentioned climate in the following order. Okay, so there is an order is given. So what the liquidator do? So liquidator, legal charges, liquidators remuneration, cost of expenses of winding up, workman dues and claim of the secured creditors and preferential creditors secured by the floating charges and unsecured creditor. So you have to, what we are doing in this question, we are just arranging in the correct sequence. Okay, So the liquidator at the time of the winding of the company, after realizing the assets of the company, what he do? He is distributed his expenses in a manner. Okay, so what he doing, the simplest way, first thing he have to do, that is legal charges. Okay, what are the legal charges he is having? After that, what are the expenses he has to, the expenses, the liquidators expenses, the second B option. And after that, what he do, he gives to the uh, he gives to the worksman due and the claim for the secured creditor. So what is over here? So what he doing? He paying to the debenture holder. Okay, and after the no debenture is given, so what he doing? He doing the payment to the creditor. And once he giving the payment to the creditor, the preference shareholder or the preferential creditor or the preferential preferential, the preferential creditor and the creditor secured by floating charges. Okay, so this is the next one. And after that, unsecured creditor will come. Okay, after that, unsecured creditor will come. So the option is A, B, C, D is already given in the right sequence. Okay, so in the liquidators, when we take making an account of the liquidated account, what we do? What we do over here, first the liquidator do the charge his legal charges. After that, his liquidator's expenses. Next one, after he give the payments to to the company's debenture holders. Okay, okay, first he charge his legal charges. Okay, first thing, his legal charges. After that, his expenses. And after that, his debenture holder prefer and after that, the creditors, he give the payments to the creditor. So worksman's due and the claim of the secure dividend. So secure dividend is going to be first in first place. Okay, so the secured creditor is nothing but a debenture holder. Okay, debenture holder, it's nothing else, it's a debenture holder. After that, preferential creditor. Okay, so while the paymenting to the creditor, he give the preference to the preferential creditor, and after that, unsecured creditor, in this way. And after that, what he do? He give the payments to the preference shareholder. Okay, preference shareholder. And once the amount is remain, if the amount is remain, so it's going to the whatever the amount is remain, or if the amount is remain, so all the amount is going in the hands of the equity shareholder. Clear it? In the hands of equity shareholder. So option number 3 is right over here. Now the next question: which of the following rules, which of the following rules stand true while preparing the schedule of changes in working capital? Okay, so for the changes in working capital, if you have seen, so rules, what are the rules stand true while preparing the schedule of change in working capital? So you know that if the increase, the option is given, we just read it question first. Okay, increase in current asset, increase in working capital. Is it true? If what current asset is increasing, our working capital is increasing. Is it true? The option number B, increase in current asset, decrease in working capital. Okay, increase in current liability, decrease in working capital, increase in current liability, increase in working capital. So you know that the working capital having the two response. Okay, he having a positive response with current asset, and he having a negative response, or you can say opposite or inverse. Okay, opposite response with the current liability. If current asset increases, working capital is increases. If current asset decreases, working capital is decreases. But he having the inverse relationship or the opposite relationship. So in case of in case of current liabilities increases, working capital going to be decreases. If current liability decreases, working capital going to be increases. So there you can see there is an inverse relationship between the current liability with the working capital. So here you can see in increase in current asset, increase in working capital. So it is true? Yes, ma'am. Increase in current asset, decrease in working capital. No, ma'am. Increase in current asset, decrease in working capital. So yes, there is an inverse relationship between the current liability and the working capital. So it is also true, ma'am. Now the increase in current liability, increase in working capital. So it is wrong. So option number A and C is right over here. Yes, option number A and C is right over here. So option number 1 is right. Clear? Next question. The basic method of valuing human asset. Okay, this question you like this is a really simple and the very little what concise or short question, but it's having a big meaning. Okay, the basic method of the valuing of the human asset. How do you calculate our human asset? The option is given adjustment, option B capitalization, option C amortization, or option number 4, that is a quasi equity. So here is, I will tell you, the here is right answer is capitalization, because we are valuing our human asset and the human asset having the capitalized value. Okay. So this is a capitalization human resource. So for the capitalization human resource cost, it is the most important, and what cost should be capitalized, these types of question will comes. Okay, and this is especially a question for the classifying the human resource cost into their expenses and the asset component. So what is basically the criteria for determining whether a cost is an asset or an expenses is related to the notion of future service potential. Clear? And here it is, the cost should be treated as an expenses. What? As an expenses in the periods in which their benefits are derived. If the expected benefits is related to your, if your expected benefit is related to your future, okay, future time period, they should be related to your what? It's related to your asset. Clear? So that's why the human asset is a capitalized value. Okay, and what is amortization of a human asset? In the amortization of the human asset, I'm talking about the amortization. Okay, so the amortization human asset, we can see there is there is an like like a human asset having the capitalized. Okay, so the next accounting problem in measuring the portion of the asset service consumed during the accounting period, the physical asset. Okay, such like a machine. Okay, and this the machine, and so this is a process of depreciation when we are devaluing or the devaluing the assets. Okay, the machinery, physical things, or the machine things. Okay, so there we use a word that is a depreciation. But when we are talking about our goodwill, our human values, human asset, in that case there is for the goodwill, not a human asset. Okay, for the goodwill there we use a amortization. What? Amortization, when your value of the goodwill going to be deplete, so in that case the amortization is used. Okay, clear? The next question, that is in case the purchasing company agree to act as an agent of the vendor. Okay, talking about the purchasing company agree to act as the agent of the vendor for the collection of the book debts. Okay, in the books of the purchasing company, the amount of debtor should be credited to. So what are we doing? You are collecting the books of debt. Okay, who is collecting? The agent of the vendor company. And his vendor company is related to your purchasing company. Okay, and in the book of purchasing company, the amount of debtor should be credited to in which account. So in that case, the options is given the vendor's data account, vendor's suspension account, debtor's account, or the creditor account. So you know that the amount is going to be credited to the suspension account. But in which suspension account? In the vendor suspension account. Okay, so in the vendor suspension account. So the option number 2 is right over here. So what is the entry of this these things? So I'm just going to share with you. That is, we write over here that vendor data's account, vendor data's account is going to be debited. So this account going to be debited. Clear? This account going to be debited. What were the amount we have to over here? The book value, the difference between the book value and the gross amount. Okay, so what were the amount we are taking? We're taking the amount of difference between the book value and the gross amount. The next, that is to what vendor of creditor account is going to be created, and one more, that is a vendor of suspension account. Okay, this is going to be credited. So there is a two things going to be credited, that is a vendor creditor account going to be credited and the vendor suspense account going to be credited. So what amount we are taking? So here we are also taking the difference of the book value and the gross amount. And what amount we are taking in the suspense account? In the suspense account, only the difference. Okay, what are the amount difference we have? That amount. Clear? Now the next question, one more thing we have to share, that is in case of debtors and creditor, it should not be included when the main entry for the purchase of the business are passed. So we not included the entries of the debtor and creditor whenever the main entry of purchase of the business are passed. So we are just taking this estimate entry, that is this entry. Okay. Now, the next question, according to accounting standard 2, which of the following costs should be included in the valuing the inventories of manufacturing company? Inventory in the manufacturing company. So option, there is an options is given, that is the front and the insurance carriage outward, depreciation of factory plant, and the general administrative overhead. So what will be the right answer? You know that the accounting standard 2, which of the following cost should be included in what is about the accounting standard 2? Okay, give me a answer in the comment box. What is related to the accounting standard 2? Yes, it is related to your here. Give me the answer. Okay, so here, yes, it is related to the cost of inventory. Okay, inventory. So the cost should be included in the valuing the inventory of manufacturing company. So what we include in this accounting section? So in the cost of inventory, we include the purchase cost. Clear? We include the conversion cost, and we include the other costs which are incurred being in inventory in their present location and condition. So you know that is front and insurance. It is your related to your inventory. Yes, ma'am. Carriage onward invoice, it is related to your inventory. No, ma'am. It's related to your sales and distribution. Depreciation of the factory is also not related to your, it's about the factory, it's not about the inventory. Okay, and the general administrative overhead, yes. No, sorry, there is a mistake. Yes, depreciation of the factory plant, it is included in the inventory, because in the factory, in the plant, there is an inventory. So their depreciation of the factory and plant is going to be in the accounting standard 2, that is in inventory. But the general administrative overhead, it's related to your office. okay, at your office. So that's why option number 4, A and C is right over here. Clear? Now the next question given below, that is two statement is given. True statement is given. That is statement number 1, deferred tax liability net, okay, is amount of tax on the temporary difference between the accounting income and the taxable income. It arises when the accounting income is more the taxable income, when your accounting income is more the taxable income. Statement number 2, that is the deferred tax net and the deferred tax assets net, okay, there is an liability and there is an asset, okay, are only book entry, that is they are neither actual liability or nor actual asset. So what is the right option here over here? So the option is not given in this question. So just I'm telling you, that is statement number 1 is right over here. Only statement number 1 is right over, that is deferred tax liability is amount of tax on the temporary difference between the accounting income and the taxable income, and that is arises when the accounting income is more than the taxable income, okay, when your accounting income is more than your taxable income, in that case deferred tax liability of amount is happen, okay. But the statement number 2 is wrong, that is uh, there is first thing, that is deferred tax liability and deferred tax assets are the only books entry, they are neither actual liability or nor actual asset. No, they are actual liability and they're actually assets. Okay, clear? Yes. The next question, I think this is the last question. Maybe no, we have one more. Yes. So, what is the amalgamation adjustment account you used for recording? Amalgamation adjustment account we use for recording. Option number 1, capital reserve in the books of transferee company, capital general reserve in books of transferee company, statutory reserve in books of transferee company, and revenue reserve in the books of transferee company. So amalgamation adjustment, one thing you have clear in your mind, the amalgamation adjustment account is used in which company? In the transferee company. Okay, if they ask the question from these areas, so you can easily mark the question. Yes, ma'am. Yes. So this is a done. That is this amalgamation adjustment account. Amalgamation adjustment account is account is used by the transferee company. Okay, in the books of transferee company. Clear? Now the question is, the amalgamation adjustment is used for recording what? Is used for recording general reserve, capital reserve, statutory reserve, or the revenue reserve. So you know that amalgamation adjustment accounting is used to record our statutory reserve. What? Statutory reserve. Just keep in your mind. Okay, this is an important question because it's credited. Okay, what we do, what the entry we have making over here, we are making that amalgamation adjustment account account amalgamation adjustment account debited to what? To statutory reserve account credited. So statutory reserve account is going to be credited. Okay, and the amalgamation account is going to be debited. So in this single question we have what we have, just amalgamation adjustment account is prepared in the transferee company, in the books of transferee company, and he recorded which the statutory reserve account, and the statutory reserve account going to be credited. Clear it? Okay, now the next question. Next question is it is a practical question, but it's just simple, don't get worried. The net profit of the partnership, because whatever they happen in this in June examination, now the question is now the paper is it will be on the basis of CBT. Okay, CBT. So CBT. So what are their electronically or this the old pattern they are taking questions. So there is a chance that they will ask the questions in the advanced level, not in the basic things. Okay. So now the net profit of the partnership business after providing the income tax from the last 5 years. Okay. So they having a profit. The profit is given 80,000, 1 lakh, 1,20,000, 1,25,000, and the 2 lakh. So the capital employed in the business is 10 lakh and the normal rate of return, that is NRR 10%, the value of the goodwill on the basis of the annuity method, and take the present value of the annuity, that is rupees 1 for the 5 years, and 10% in the 3.7907 approx. So what will be the amount of annuity? Okay, so how do we going to be calculate it? So there is a simple formula for the goodwill. You know what? That is a goodwill is equals to, either you can say that goodwill is equals to average profit, average super profit. Okay, super profit multiplied by present value of annuity. Okay, so we first of all we have to calculate the average super profit. So how do we calculate average of profit minus normal profit? Okay, normal profit. So what we do over here, we take a average. Also, okay, average of 80, average of 80,000 plus 1 lakh plus 1,20,000 plus 2 lakh. Okay, and 2 to 4 and 1 lakh plus. So 1 lakh, 2 lakh, 80,000, 1 lakh, 1,20,000, 1,25,000. Okay, one more, that is 1,25,000. So what we're taking? We're taking the average of this. Sorry, average of this. Okay, 5 divided by 5. So how much we get? We get 10 lakh rupees. Okay, and from 10 lakh rupees, we have what we calculate 10% of 10 lakh. Okay, 10% of 10 lakh we have, that is a what we do, and from the amount we deduct the whatever the amount we will get. Okay, after averaging that. So let's get calculate. Just give me a second. Okay, just give me a second. 80,000 plus 1 lakh plus 1,20,000 plus 1,25,000. Okay, and then 2 lakh. Clear? So we will get 6,25,000 and divided by the 5. Okay, so 1,25,000 we have. Okay, so from the 1,25,000, the average is 1,25,000, and from the 1,25,000 we will deduct the 10 lakh. Okay, of 10%. So we'll get near about 25,000, and from that in the 25,000. Okay, so our goodwill is 25,000, and from the 25,000 we will multiply this amount, that is the annuity amount, that is 3.7907. So what amount we will get? 94,770. Okay, so the 94,000 sales option number 3 is right over here. Clear? So here, thank you so much. We have completed over here the main questions. So we'll continue this types of question in next lecture. So thank you so much.